the industry has changed tremendously in that those legends you mentioned are all under a ton of stress in the last 5 years. You can name a handful that have closed. You can name a handful that have been redeemed to about a family office level. And you can name a couple that are subsidizing the enterprise out of their own pocket. That has shifted the way that people think about their business, its size, and its cost base. Because if you go back 10 years ago, you could go to a big hedge fund and say, hey, how do you think about allocating your broker wallet? And some of them might say, we don't know, we don't care. Which is to say, like, as long as we're making money, it runs itself. Having had 3 years of mediocre performance, that business model doesn't work, and so people had to reconcile specifically the stuff that doesn't necessarily drive revenue. So analysts, traders, and all of the stuff that you might generally class as the support apparatus, which means they have fewer luxuries around, and those who provide those luxuries are less in demand, versus everybody is looking to find the next best trader that nobody has spotted yet, that has the good track record, that has the clean reputational background, which is a big deal. And that means then the hiring market has become a whole lot of people who everybody has passed on that continue looking in vain for work, and 3, maybe 4 celebrities that come out per year from some place, tried to start a fund, it didn't work, go back into free agency, and then land somewhere at a name brand.
The changes that we've seen, do you think that, and probably most people say, look, these are all interconnected, but things like the difficulties that the traditional macro hedge funds have experienced, is that the rise of passive investing? Is it the rise of the robots and AI? Is it the rise of